It is time to focus in manufacturing. 2024 is an election year and market looks volatile, sometimes up and sometimes down. How to invest and make money because so many things happening around. Like Indian government has ended tax relief for foreign portfolio investors or FPIs from Mauritius, as Mauritius is the fourth largest source of FDI in India and owns about 6% of total FDI assets in the country. Second, there is a possibility in United States of America that Fed would cut interest rates as early as June. Third, higher bond yields in US, and we all know that higher yields are negative for FDI inflows. The positive thing is that the domestic liquidity remains high. Fourth, we have rising commodity prices like gold, silver, zinc, copper, cocoa and coffee are on an uptrend. And do you know that rising commodities mean rising inflation, and if inflation is high, interest rates will be high, and these will lead to higher borrowing costs and low profits, and that can lead to falling of stock prices. These type of news are constantly provoking our minds. Here, we should shift our focus to some specific sector which can generate profits out of the situation. And the name is manufacturing. Why manufacturing? Manufacturing expected to drive overall economic growth in Amrit Kaal. According to Morgan Stanley research, manufacturing GVA gross value added in FY23 was 453, which can grow 2.8 times in FY30, and that is 1281. Do you know that India is now one of the largest manufacturer of three-wheelers and tractors first, two-wheelers second, heavy trucks third, and cars fourth in the world, and is a significant producer of auto parts. Indian pharma manufacturing has been a major success story, with formulations and biological exports growing at 8% CAGR versus 5% for the global market. And Indian companies have gained large share in generic segment in the US. Look at the picture. It's indicating that the domestic production replacing imports. Value of imports for air conditioning machine and its components has nearly halved, and import content per unit has declined by 60%. Toys exports have started to increase gradually, and imports are declining fast. EMS industry could mimic this success story with expectation of 25% CAGR in exports. ICICI Securities HSBC research proved that India gaining export share. So, the question is, what has changed? Large export opportunity in the multipolar world and the large consumer base, large and skilled labor pool, cost advantages versus peers, improving infrastructure, service ecosystem to support high-end manufacturing, focus on Atmanirbhar Bharat, low leverage and higher capacity utilization, and macroeconomic stability along with geopolitical factors. Do you know that China's share in the US goods imports has declined from 21% in 2018 to 13% in 2023? So, the shift away from China has accelerated post-COVID pandemic and India as the office and factory to the world. iPhone production ramping up in India, and Samsung lead a large push in exports from Vietnam, and today accounts for $65 billion of goods exports. So, all case studies depicting India's rise as a manufacturing powerhouse. And here we have the opportunity to buy that manufacturing powerhouse within our limits, and there is an offer from a renowned brand named HDFC AMC comes with HDFC Manufacturing Fund NFO with Rs 10 NAV value from 26th April to 10th May 2024. So my suggestion, whatever money you have, just invest in this because opportunity doesn't knock twice. Mrinmoy Chakraborty, an investment and insurance consultant. If you derive some value out of my video, then please subscribe my YouTube channel and share it to the other people so that they can be benefited. And if you want to discuss something or if you want to consult, then you are feel free to contact me anytime at the following details. Thank you.